and I was just, it piqued my interest. Their ticker symbol on the stock exchange is just letter O. So I just went on Bamboo, and lo and behold, they were right there on Bamboo.
Oh, okay. What is the ticker symbol?
Okay, ticker symbol, all right.
You just put
Another,
the technical thing.
right. So yeah, it is a unique identifier for companies that are listed on exchanges. So unique identifier,
Mhm.
it is like an abbreviation, or mostly, or let me say, a lot of them use kind of an abbreviation of the company name. So you might see Google or Alphabets,
Name.
they are, so, and you might see GOOG. I believe that's how they are listed on the stock exchange. Or Apple, I believe Apple
Mhm.
is AAPL.
That's Google, yeah.
Right, yeah.
Yes,
Then,
AAPL.
so it's just like a unique
Microsoft
identifier,
is MSF.
right? Microsoft is MSFT. So two companies don't share the same ticker symbol, so that it's not confusing
Just
to investors. So that's the unique identifier. So that's what the ticker symbol is.
one funny thing is when Meta was changing, when they changed their name and they were
Yeah,
changing
from
their
Facebook to
ticker
Meta.
symbol from FB. So yeah, so a lot of people it got some adjusting, and yeah, it was they had to do a lot of awareness and marketing so that people will know. Even though it's not relatively that difficult to
Right,
get to buy, but yeah, that's just one change that happened that was a bit
right.
interesting. Let's not go about the name change right now.
So talking about the S&P 500. So investing in the S&P 500, how do you invest in the S&P 500, or how do you get an exposure to this 500 companies?
How do you invest in the S&P 500? So exactly, okay, then yeah, how do you invest? So there's the index, and there are brokers that have their own kind of their own products that mirrors the S&P 500. So Vanguard, for instance, so Vanguard is a big asset manager. They're like one of the biggest globally. There's they have the S&P 500. I think it's what's the
VOO,
name of that? I think it's VOO. Yes, VOO.
right?
Fidelity also has theirs. So you have all these
Yeah, there's also the one
different asset
from State
managers.
Street. So you might hear Spider. So it's
Yeah.
called
Yeah, I think Fidelity's one is
SPDR,
FXAIX or something like that.
right? And these
Yeah, and
are
Spider. I know. Yeah, I know Spider.
ETFs, which brings us to ETFs.
Yeah, exactly. So what are ETFs be? From their name, exchange traded funds.
Right, right. So they are exchange traded funds. So I like to look at it just like the S&P 500 example, where a group of companies are brought together such that you
Mm-hmm.
get exposure to all the companies in that basket. So exchange traded funds are developed, or they by these fund managers that we've mentioned, like the Vanguard or the State Streets or the Fidelity, right? And they, with their knowledge, they have wealth of experience investing, blah blah blah. They are managing huge amounts of money. So they've invested in analysts, in research, and they've put together a lot of these exchange traded funds that all of us retail investors, which is you and I, get exposure to. So you can find ETFs if you are someone that
Exactly.
is bullish on the renewable energy sector, for example. You can find ETFs that constitutes of companies just in that sector. So you can find an ETF that has maybe
Yeah.
the top 25 companies in the sustainability space or the renewable energy space, and invest in that ETF if that is something that you are bullish on.
Yes.
Or you can find right now, if you are bullish on cryptocurrency, I know that a couple of them, they have this Bitcoin ETF, where if you don't have access to crypto exchanges, or you are more comfortable investing through a traditional
ETF. Yeah.
fund manager, you can invest in crypto using the Bitcoin ETF. And there's just a lot of them. I've been exploring the energy ETF from Vanguard this year. going by the promises of the Trump administration, and it has not gone anywhere.
Yeah.
I've looked at it like 3 times, thinking maybe it is something worth investing money in, maybe sometime down the line this year, and it hasn't moved a bit. So yeah, so that's just what ETFs are. There are a lot of them,
Yeah.
and the upside or the pro for is just the diversification, right? We don't have knowledge of the future. We can't see into the future. So you just have that exposure to say, if 5 of these companies end up going, I don't know, 5x in the future. I
Mm-hmm.
mean, hardly anybody could have predicted what happened with Nvidia the past 2 years, or what
Yeah.
happened with Palantir, right? But if you have exposure to the S&P 500, for example, you get to
Yes.
ride, off the wave and just profit off that. So that's what ETFs are.
Absolutely. So I think another, yeah, that's really important. It's really important to like diversify, especially for retail investors. You can't afford to take very concentrated bets. So concentrated means when all of your funds are in one particular company or particular stock, because what would happen is you can experience a lot of devaluation in your investments just by any win. So for example, I think very recently Nvidia experienced a massive sell-off. I think was it 2 weeks ago? Yeah,
Right, right.
due to
About 2 weeks ago.
there was the deep sea. Yeah, and a lot of people had like positioned themselves, in Nvidia, hoping that to just keep going higher into the future, and they just experienced what we call a correction. So that news really wiped off some billions of dollars from their market capitalization, and yeah, it affected the share price. I think
Another term
I've
to
used
look
some
at,
terms there.
market capitalization, right? But just to before you go into
Yeah.
what market capitalization is,
So
it is very important, the diversification aspect. I just remembered, you don't know what can happen with a company, right? They could pivot their messaging or their products into somewhere or into a direction that consumers are not comfortable with. It is something that happened last year with, is it Bush, the owners of the Bud Light beer, and with the campaign that
yeah,
they went for,
AB,
you had a
yeah,
lot of
AB InBev.
yeah, AB InBev, and you have a lot of their core consumers revolting basically against the company.
Mhm.
Saw a drop in the share price, and they had to
Yeah.
rework their steps such that, so if you had, for example, exposure only
Yes.
to AB InBev shares, in that case you lose. But if you are exposed to the market in general, say you had an ETF that was tracking alcoholic beverages, I don't know if there is one, but if you had investments in that, you get to profit, because a lot of people moved away from is it Budweiser or Bud Light, and moved to other beers. So basically, you get to profit off both ends in that scenario. So yeah.